Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, November 2nd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. I want to also remind you that very recently, the last week or so, we put out stock picks on Alphabet, Google, Cisco, NetEase. Check them out. Go to wickedstocks.com. You'll see it all for free for that 5-day free trial. Anyway, on with the charts with Tesla. This is sort of looking at the big picture here. We settled a few weeks ago below this rising long-term channel bottom that's projected off that January 23 low. This week at 252.49, then indicating 118.43 as a 3 to 5 week objective on the way down, paying respect to the rising 2/3 speed line that all week long is at 203.11. But on the daily chart today, is at 205.25. Now, we did settle just above this line study on Wednesday, but I don't think it indicates follow-through buying. Now, that may happen, but we could just as easily open right at or below 205.25, which will allow the market to fall back to 193.08 perhaps on an intraday basis. Now, that would be quite a sell-off today, I grant you that. But there's nothing but minor points all the way down. 202.80, 255, 197.36, 193.88 is the next sort of, especially for aggressive day traders, stick your neck out buy level for the day, especially if you're short from 205.25. That's a great profit taking point at 193.08. Now, I'll just say that if we close today below 193.08, 186.11 actually in reach tomorrow with that kind of volatility, which would meet the objective from several weeks ago when we closed below this channel bottom at 254.87. Now, we settled below it. If you recall, I'm going back in history here, a couple, 2-3 weeks ago, we settled below it, not by the 1% margin. The following morning, where the earnings came out before the opening bell, we gapped decisively lower, continued south, and that was the sort of the sell signal event fundamentally over the last couple of weeks. But technically, you could make a case that we had a sell signal the day before when we closed below the 254.87 channel bottom. On the way down, anticipating 205.25, we bounced nicely off of that a little over a week ago and settled below it 3 days ago. I can't say that we've closed back above it. I mean, we technically have, but it was so close. It would be so easy for this market to open a little lower today, 205.25, and then we could fall perhaps to 193.08 intraday. And that would be about as far south as I would anticipate. Now, if we do push through or open above 205.25 today, this 211.07 formation is in reach, is likely, can contain session strength. There's a part of me that really wants to make this a 3-star resistance area, like able to contain buying into next week, and from here we can fall off to what is still a targeted support level at 186.11 on the daily chart. On the weekly chart, the same formation is 184.43. So for those of you who trade the 3 to 5 day swing trade, let's say, 211.07 is really your next spot. So not only day traders can make use of 211.07, but swing traders perhaps, as we could fall off from here by the end of next week, finding ourselves meeting that longer term objective at 186.11. Now, if we do close today above 211.07, 219.59 likely tomorrow, and over the following 3 to 5 days or less, 227.19. So closing above 211.07, no good reason to be short Tesla. If you're a 3 to 5 day swing trader, you actually want to be long. If we close today above 211.07, long into next week, owning Tesla up to 227.19. 227.19 is a meaningful descending one-third speed line that, if tested between now and, say, the end of next week, can absorb buying through the balance of November, and from here we can fall off back to the 186.11 structure. So this wedge here is really our 2 to 3 week two-sided framework. It's 186.11 is more than a 2 to 3 week support level. It's more like a 2 to 3 month support level. We can bottom out at 186.11 through November, perhaps the balance of the year, and from here rotate back up to this blue channel top. It's not a channel top yet, it's a mere trend line, but once we test the channel that the trend line is formed from, the trend line becomes a channel top, if that makes any sense. And also what I like about this descending blue line, this future channel top, let's call it, is the fact that it will be converging over the next few weeks, couple of weeks, with this rising 254.87 channel bottom anyway. So I don't want to get too far ahead of myself. I will just give you the heads up that if we do close above 227.19 over the next couple of weeks, that signals a good November low, and we should push on into the mid 250s, maybe even higher, probably a little higher into the lower 260s by that point in time, within several weeks of closing above 227.19. So this is your kind of 2 to 3 week time frame right here. And whether we test 227.19 or not has everything to do, in my opinion, with whether or not we close above 211.07 today. And if so, I see 3 to 5 day rally by the end of next week, at the latest 227.19, where we could top out through November, fall off again back into, this longer term support area at 186.11. Let's talk downside today. I'm going to zoom in here just a little bit. Of course, and I'm just going to mention it once more, that we do have this speed line at 205.25. And if we open below it, we can ease back. And in fact, back to 193.08. I don't show 193.08 here. I can tell you, if you can imagine, we have this trend line coming off these tops and this channel bottom coming down. And what very often works on an intraday basis anyway, and sometimes as a session containment level, is if you run a parallel blue line against the low that was put out on Tuesday of this week, that is the actual move low, that is 193.08. And it can contain intraday selling pressures. And I don't have it actually illustrated here, but just know that if we hold today below the 205.25 level, we just might fall to 193.08 intraday. All the minor points on the way down have been carefully chosen. So if you are an aggressive day trader where you're trading more than once a day, several times a day, or even more, each of these minor points has been carefully chosen for your use. Pushing above 205.25 once again should yield 211.07, our key resistance for the day and through the balance of the week. And if settled above, does indicate 227.19 between now and the end of next week. 211.07 though, until then, able to contain buying not only for the day, but we could fall off of here into next week. So keep that in mind. Fall off back into the 186.11 area between now and the end of next week. And finally, it would be a settlement today below 193.08, and I don't see this happening, but if so, we tomorrow test 186.11, which is the beginning of a range down to 184.43 on the weekly chart that can absorb selling through the rest of the year, and from here we can rally up into the 250s, 260s within 2 to 3 months of testing the mid 180s. Now, of course, if we were to close this week Friday below 184.43, and I do not see that happening, but if so, this thing begins to spiral south to 101.81 over the following month or two, I would think, where we could double bottom for a period of time, but I think it actually keeps heading south if we close below 184.43. I don't really want to go there. It's a waste of time right now because because I don't, first of all, think it will happen. And secondly, it's just way too far ahead of us for all intents and purposes. Anything else to say? I don't think so. I'm going to leave it at that. I'll leave you with this chart for the day. It's the most appropriate, I think, in terms of our day resistance and our resistance to 1107 into next week. You have a great day. I'll be back tomorrow with Friday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com.